What's up, traders? In this video, I'll be performing a market forecast on EUR/USD. So stay tuned. Now, in this video, I'm going to be breaking down my outlook for EUR/USD for the month of October 2025. I'm going to be focusing on the weekly, daily, and 4-hour timeframes in order to give you guys a long to medium term view of what I think is going to be happening on this pair over the coming weeks. The main reason I perform these market forecast videos is to show you guys how I establish a directional bias and how I identify potential areas to trade from based off of that directional bias. Now we're going to kick things off here on the weekly time frame, and not an awful lot has changed on this time frame specifically since our last market forecast video. Overall, the weekly time frame is still pointing bearish as price action trades within this large bearish weekly external range. The overall objective for the weekly time frame is a violation of my weekly weak low that sits down here, but at this current moment in time, my weekly pullback is still taking place. This is being facilitated by bullish weekly internal structure. My most recent bullish weekly internal range that sits in here has not quite been established yet. I do have my last bullish weekly internal breaker structure here, and I do have my current weekly internal strong low in here, but as it stands, I have yet to establish my new weekly internal weak high. And that is simply because of the fact that this weekly internal impulsive phase is currently taking place. So the weekly internal is bullish as it is facilitating my weekly pullback phase. What is it that we can deduce and what is it that we can take from this analysis going into October? Well, we understand that we are waiting for the establishment of that new weekly internal weak high. And the question we want to ask ourselves is, where is that likely to occur? At this current moment in time, this weekly supply zone that sits at the extreme is our next major buy target for the weekly pullback phase currently taking place. Now, this is a well-priced POI within the weekly bearish external range, and it is essentially the last POI where the bearish weekly continuation phase can originate from. Now, depending on price delivery during the course of October, we could potentially see not only the establishment of our new bullish internal range, but also the start of our internal pullback phase originate from a mitigation of this weekly supply zone. And this is because a bearish reaction to this weekly supply zone can be enough to initially help facilitate the start of the internal pullback phase and allow for the establishment of the new bullish weekly internal range. Now, there is obviously also a scenario in which our new internal range is established before this POI is mitigated. That does not change the fact that this is our next main buy target. It just means that it won't be the POI that will have potential to help facilitate the establishment of this bullish internal range. So the key points here for EUR/USD on the weekly time frame is that, number one, the overall objective is a violation of this weekly weak low, but at this current moment in time, the weekly pullback phase is still taking place because of the fact that internal structure is pointing bullish, and the next main buy target for this weekly pullback phase is this extreme weekly supply zone that sits in here. It is a well-priced POI that swept liquidity prior to its formation. It has liquidity built up below, and it also has some imbalance which price action can look to fill. But it's important to remember that as much as we would like to see the bearish weekly continuation phase originate from this POI, a mitigation is not a prerequisite or guaranteed. Now, from the weekly time frame, we can drop down to the daily time frame, which is obviously the internal of my weekly time frame, and we can see here now on the daily time frame that bullish weekly internal range that is currently forming. Here we have my most recent bullish daily external breakout structure. Here we have my current daily strong low. And here we have bullish daily internal structure that is coming together to help facilitate this daily impulsive phase that helped generate this daily bullish breakout structure. And just above this current price action, we have that weekly supply zone that sits at the extreme of our larger bearish weekly external range. So the overall directional bias here on the daily time frame is bullish, as we are currently trading within this daily impulsive phase. At this current moment in time, my most recent daily internal range is a bullish daily internal range that sits in here. And we can see that an internal pullback is currently taking place. Now remember, we have yet to see the establishment of our new daily week high. The point at which we are able to establish that new level will be when our internal structure shifts from being in a bullish market state to then being in a bearish market state, because a violation of the internal strong low will signal the end of our impulsive phase and the start of our pullback phase. And that is the point at which this high will become our new daily week high. And that is the point at which we will be able to define our new bullish daily external range. Now, specifically going into the month of October, how can we utilize this information to establish a directional bias and to help us look for those potential trading opportunities? Well, we know that the current objective of this bullish daily internal range is going to be a violation of this daily internal week high. So the question we then want to ask ourselves is, how is price action likely to go about violating this daily internal week high? Well, ideally, we would like to see a pullback into a well-priced POI, a mitigation of that POI before a resumption of this internal bullishness. And to that end, the next main sell target for the internal pullback that is currently taking place is going to be this daily demand zone that sits at the extreme of the current bullish daily internal range. Ideally, I would like to see an internal pullback come into this daily POI, see a mitigation before a potential resumption of that internal bullishness. We have a nice pool of trendline liquidity that sits just above the area, and we also have some imbalance that price action may look to fill. This is the point at which the weekly supply zone comes into play, because if we are to see a new bullish internal breakout structure pushing up towards this level, it will mean that our daily impulsive phase is still taking place. And it will also mean that our daily pullback phase is still due. And this is why a bearish reaction to this weekly supply has that potential of initially helping facilitate the daily pullback phase, because a bearish reaction here might help facilitate the violation of whatever new internal strong low we see at that particular point in time. With that being said, however, we need to acknowledge the fact as well that there is the possibility that during the month of October, we see price action violate the internal strong low before this weekly supply is mitigated. And in that event, our next main sell target for that daily pullback would then be this weekly demand that sits all the way down here. However, if we are to see a violation of the internal strong low, realistically, this POI would only truly come into effect closer towards the end of the year, as opposed to during the course of October. Obviously, anything could happen, and we could see a very strong bullish push in price like we saw during this period that could easily push price down lower. But if we are to see fairly steady price action, realistically, this POI would potentially only come into play during the course of November. So now that we understand that overall we are bullish here on the daily time frame, we now have identified a POI where we would like to see that bullishness resume from. And this means that for the first half of October, we can deduce a short to medium term bearish directional bias down towards that POI. And so as much as you have an overall directional bias which is bullish, you can still capitalize and utilize a short to medium term bearish directional bias, potentially down towards this daily demand zone. And now finally, from our daily time frame, we can drop down to the 4-hour time frame, which I regard as the internal of my daily time frame. And we can see that we have here that most recent bullish daily internal range, which is currently represented as my bullish 4-hour external range. Now, as touched on in the previous market forecast video, given the nature of price delivery, we have a scenario right now where my 4-hour external and 4-hour internal structures overlap, but that's not too big of a deal because we still have a defined range that we can work with. Now, in terms of this bullish 4-hour external range, the overall objective is a violation of our 4-hour week high, which sits up here at around about 119.187. We now want to ask ourselves, well, how is price action likely to go about violating this level? What we want to do is we want to identify potential POIs that can help facilitate that underlying bullish 4-hour momentum. And to that end, we have two 4-hour demands that sit in here, which are going to act as our next main potential sell targets for the 4-hour pullback phase that is currently taking place. The first 4-hour demand that sits in here swept liquidity prior to its formation, has the imbalance, and also has a pool of liquidity above the POI, making it a solid first POI to look for potential buy opportunities from. However, given the proximity to this 4-hour demand that sits just below, there is the potential that this POI could potentially act as inducement for 4-hour demand just below. Now, in order to offset some of the risk associated with this POI potentially acting as inducement, instead of trading this POI directly, if we are to see a mitigation before price action violates this level, we could, instead of trading the POI directly, wait for a mitigation and wait to see bullish commitment coming out of the POI before we get involved in potential buying trades. By waiting to see some bullish commitment, by waiting to see the buildup of bullish price action after this POI is mitigated, we are trying to just offset some of that risk by not trading the POI directly, because we could very easily see price action coming down and trading straight through this POI in order to target this POI. Now, the interesting thing about this particular 4-hour time frame and these two 4-hour demand zones is the fact that both of them sit within that trend line liquidity pool that we identified on the daily time frame. And this means that any trade taken in this area has the potential of being used as inducements in order to help facilitate a mitigation of daily demand that sits at the extreme. Because if you think about it, the more people are interested in trading from these POIs, the more they are adding to the liquidity that sits in this area, and the stronger this daily demand zone becomes for potentially helping facilitate this bullish 4-hour continuation phase. So specifically going into the month of October, we, number one, can look for potential selling opportunities from where price action is now, trading down towards these 4-hour demands as we look to get involved in a resumption of this 4-hour pullback. However, if and when price action comes down to these 4-hour demand zones, we need to be aware of the fact that any buys are going to be taken in a liquidity pool area. So for me personally, I would really like to see a mitigation of this daily demand before a potential resumption. We also have a refined 4-hour demand that sits within that larger daily POI that gives us the option to trade this area directly here on the 4-hour time frame from that refined 4-hour demand zone, giving us a slightly better risk reward entry point, something like this, aiming for the 4-hour week high. This would be a very textbook swing trade opportunity where you would be holding this for weeks on end. Or if you don't want to go down that route, you can simply wait for price action to come down and mitigate this POI first before looking for those potential buying opportunities. Understanding as well that there is the possibility that the 4-hour strong low is violated in order to help facilitate the daily pullback. So it'll be interesting to see what Euro USD is going to do during the month of October, while we do have an overall directional bias, which is mainly bullish, as price action looks to potentially trade up towards this weekly supply zone. There will definitely be opportunities in the early part of the month to look for potential sells, possibly down towards this daily demand zone. And if that area were to fail, if that area were to only give us a short-term bullish reaction, then we have a lot of real estate to look for potential trading opportunities, possibly down towards this weekly demand zone here. Obviously, there are areas of liquidity like this that price action is likely going to target first and give reactions from. But for the most part, the next main area of interest after this area is violated would be this weekly demand zone. Now, if you guys found this video helpful, informative, or entertaining in any way, shape, or form, please make sure that you give it a like, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching. Speak to you in the next one.